Hey, Tim Curley here with your Friday FAQ. And this week's question is, can I use my assets, or if you're an agent, can my buyer use their assets to qualify for a mortgage loan? So what we're talking about here is maybe a situation where you don't have a lot of income, or maybe you don't have any reported income, let's say on a tax return, but you have a large amount of assets in the bank. So can that not be used to qualify for a loan? So let's remember, whenever lenders look at mortgage loan, you have to be able to show that you have enough income to make the monthly payments on the new mortgage plus any other payments that you might have. And that's the calculation of the debt to income ratio, as well as the housing to income ratio. So there's got to be some income that can be used there. So again, what if you have a situation where you don't have any reported income, but let's say you've got $1 million in the bank. So yes, there is a provision for that. This won't work on any government loan. So it has to be a conventional loan. And it appears the guidelines have changed on that a little bit. It looks like only Freddie Mac will allow that now. But basically, just to kind of simplify it for you, they take the amount of assets, the eligible assets you have, divide that by 240 months, and that's the amount that can be used for your income for the debt to income ratio calculation. So for instance, let's say you had $1 million in the bank. Take $1 million, divide that by 240 months. That gives you a monthly qualifying income of $4,166.66. Again, that can be used to calculate the debt to income ratio. Now, there are lots of restrictions and guidelines around this. I'm not going to get into all that, but just a few things to be aware of is assets. So you would take the assets and subtract out any assets that you're going to need for the closing. Okay. So for instance, that $1 million that you have, let's say you're putting $200,000 down. Well, we have to subtract that. So now you don't take the $1 million and divide it by 240. You take 800,000 and divide it by 240. If that's, if you're going to use 200,000, if you're going to need the 200,000 as cash to close, that's the first thing. A few other things. You can use retirement assets if the retirement assets are not already being used for income, if that makes sense. So if you've got a large amount, let's say in an IRA, and you already have a distribution from that, well, we can't take that balance and also use it for the asset dissipation calculation. The other thing too is if funds are just sitting in let's say a money market account or a CD or something like that, that those are eligible funds that can be used, but at least one borrower on the transaction has to be at least 62 years of age. Also, cryptocurrency at this point in time cannot be used in this calculation. So that's important to remember as well. And there's some other guidelines there too. So if you or your client is interested in looking into this and seeing if this is something that can be used to qualify, or if you have any other questions around this particular strategy, let me know. I will be glad to help. Thanks so much for watching. Take care. We'll see you soon.